Hello everyone, I am Rishabh Shah, and in this video I would like to explain what you as an investor should look at before buying mid-cap stocks for your portfolio. We have created a model portfolio of 5 best mid-cap stocks to buy. Crompton Greaves Consumer Electrical, Escorts, Relaxo Footwears, Polycab India, and Deepak Nitrite. This list of stocks is for a long-term horizon, keeping several fundamental factors in mind. As an investor, this will guide you to make your own checklist and research these stocks better. Now, mid-cap is a term that includes stocks which fall in between large cap and small cap categories. Generally, mid-caps are stocks with a market capitalization in the range of Rs 5,000 to Rs 20,000 crore. This classification is variable and can change with the change in a company's market capitalization. However, the classification is also subject to a company's rank in the benchmark indices such as Sensex and Nifty. For instance, the companies which are listed from 101st to 250th in the Nifty index are generally considered mid-cap companies. Given their advantageous position in the stock market, where they can exploit the best of both ends, that is the risk moderation and substantial returns, mid-caps have become a favorite for the seasoned investors. They also aid in diversifying an investor's portfolio. Now let's look at the various metrics to see before buying a mid-cap stock. No matter what size of the stock you are interested in, it is important to invest in companies with strong balance sheets. Given the unpredictability of businesses, a strong balance sheet can help a company survive the lean years and enable mid-caps to become less risky. We have carefully chosen stocks in our model portfolio which are financially sound, have low debt levels, and are high in liquidity. Revenue and earnings growth are the two most important factors in long-term returns. A shareholder earns when the company makes profits. It is important to pay attention to them for any signs of changes from quarter to quarter or year to year. Any significant decline would be a red flag. Looking at Deepak Nitrite, the company has delivered a revenue growth of 26.09% over the last 5 years and an earnings growth of 63.32% over the same period, which is very high and is consistent. Another important factor to look at is the management quality. Since large cap companies have a long history of in-depth coverage by research and brokerage houses, investors can be more confident about the quality of their management there. But in the mid-cap space, we have to ensure that the company's management has the capability and the bandwidth to take the company to the next level. Below are a few checkpoints to assess the management quality, such as the promoter's background and remuneration, related party transactions, promoter's stake in the business, and any sign of manipulation in accounts. Another important criteria for a good mid-cap stock is to look for the business that have high margins. Usually companies command high margins either due to a lack of competition or some moat or some operational efficiency, or because they command a leading position in the industry. Moreover, these stocks should have sustained margin over time that doesn't fluctuate every quarter or year. Looking at Relaxo Footwears below, the company's operating margins have been improving and are consistent. Competitive advantage is one of the best ways to identify a good mid-cap stock. A company can stay in competition by offering better services and products as it grows. To spot whether a company possesses a competitive advantage is to see how innovative they have been. You can do so by taking a look at the patents they have, how active their research and development wing is, how frequently they launch innovative products and services. For example, Crompton Greaves in our model portfolio has an excellent product portfolio focusing on product innovation and diversification. The company has launched the Aura Anti-Dust Fan, which is the first fan with a 5-year warranty. The company has also launched an anti-bacteria bulb, which is a health proposition which kills up to 85% of the bacteria in the house, and this is certified by the Indian Medical Association. So the bulb is a true market differentiator. This zeal to keep innovating and tweaking or diversifying their offering as per demand has given them a competitive advantage. Below are a few risks to keep in mind before buying a mid-cap stock. Value trap is when a company consistently operates in low profit with limited cash flows and cannot break through the phase while investors hang on to them thinking they will grow one day. Mid-cap companies, especially the low-ranking ones, are prone to these value traps. Also, mid-cap companies are likely to have less efficient managerial and organizational infrastructure than the large-cap companies. Therefore, even though they reap high profits and attract value appreciation, they might not be equipped to utilize the same optimally. Lastly, an effect of a financial bubble. A mid-cap company's exceptional performance can be a result of an unstable financial bubble. Most of these companies, however, do not have the financial fortitude to withstand when the bubble pops. Thank you.